David, it's great to have you back. I wonder what you make of some of these comps. I mean, North America being able to hold on to some pretty tough compares.
Yep. Yeah, North America pretty good. The U.S. Up 3.5%. The industry was more like up 2.5%. To some degree, it's a little bit back to earth. You're seeing check come back down. A lot of those big check family orders are tough to lap, but mobility is improving and getting some of the more sort of commuter on-the-go traffic coming back there. But the big story is the international. That's really what's coming back and driving the quarter.
Right. Yeah, people watching UK, France, Japan. It seems like the tone of the call, David, was that consumer is robust, solid, but that some of the lower income consumers may not be. How do you think that's affecting their ability to price?
Well, you know, the funny part about that is that the under 75,000 income group, that cohort really pulled back the most from restaurants during COVID. Now we're worried about that same cohort post-COVID because of the reasons you mentioned, negative real wages being number one reason. Clearly, that's going to be something that causes these fast food guys to go back to doing some value by the end of the year. Of course, you have to wonder about labor shortages. That's something that's on the minds of, say, Domino's shareholders right now as they're trying to get drivers. So to some degree, we're trying to wade through all of these issues. If people are struggling, will we have a labor shortage on the back end of this, just like we're going to need some value for those people that are getting back to work.
David, I wonder how you think about the way the stock's positioned here. We introduced this by talking about McDonald's as a consumer discretionary stock, but arguably kind of acts a little more like a consumer staple, valued somewhat like one, about 25 times forward earnings. You're going to have, I assume, some foreign exchange headwinds here. Are people kind of hiding in an area like McDonald's, or what do you think the upside might be if you think there is much?
Yeah. We see this thing creeping higher from here. The story did change. To your point, it became a staple and a hideout name. In fact, during tough times like '08, which had some stagflationary elements to it, just like now, the stock did relatively well because it's a franchise business model at its core. It does have some company-operated stores, and we saw those margins get hit this quarter. But overall, you have a good dividend, and it's inflation protected even more so than many of the so-called consumer staples companies, with the exception of maybe a Hershey, which has done relatively well. You know, pricing power is not as clear in many of those consumer staples. McDonald's has been able to drive tons of price over the years, and even if they have to do some value, they can take price elsewhere. So this will be pretty well positioned. The international recovery was going to drive monster earnings upside. That's off the table. So the exciting year is off the table. Now we're back to looking at McDonald's as an inflation-protected staple.